Areas of the forex trading market. Have you ever wondered why, after plotting your support and resistance zone, the market didn't respect them, or the market got to the levels and refused to reverse, to continue, just do whatever you want it to do? That is because you are not picking the exact levels areas of the market. So in today's video, we'll be learning about the 3 key level areas where price retrace down to and continue their trend. Note, this is for a trending market. We are going to talk about the order blocks. We're going to talk about how I use the moving average as a dynamic support and resistance level, and we're going to talk about the last part, which is the market structure. So in today's video, I advise you to watch to the end because it's going to tell you a lot about how to plot your support and resistance level. Thank you. Keep on.
Guys, welcome to today's video. We'll be talking about the key level areas of the market. On my chart, I already highlighted them. We have the blue rectangle, the moving average line, and my horizontal line. My horizontal line is for the market structure strictly. Then the blue rectangle you are seeing there is strictly for order block. Now, when price tends to trend, we'll be looking at this particular trend from this place up to this level, to this particular peak here. Then we'll now look at this particular drop from this place to this particular place. So in a nutshell, we'll be covering this area to this area for this video tutorial. Now, whatever happens here occurs to every other price movement. It's still the same. Now, when you look at it, we have our bullish market already. Price forming the higher high. Price forming higher high. We have our bullish market from this place to this particular level. Now, what we are interested in knowing right now is the key level areas where price reversed to in order to continue the trend. We're looking at those rejection areas, those support and resistance level. Now, while trading, we have so many support and resistance level. In fact, every price area in the chart is a support and resistance area level. But what we need to do is to pinpoint out the key important levels, and that is what we are going to be doing today. On a normal, when we go through baby pips, we are told to turn our chart to a line chart and pick out every lower low. Can you see every lower low, the areas where price tends to do what? Print a low. That is our support and resistance level. When we add them, let me add them all. I had this level, this level, this level, this level. Now, when you look at all these areas, our chart already is becoming so clumsy and so filled with so many lines, and we won't be able to spot out the key support and resistance level area. This is what we have to do during baby pips. You pick out every low that is being formed during the bullish market. Now, when we turn this back to a candlestick, can you see our chart looks so clumsy? It looks so clumsy in the sense that we don't want our chart to be like this. And so what we'll be doing today is we'll be selecting them into 3 by spotting the 3 level areas, key level areas of the market. Now, the first part is this. We have the indicator level moving average, the indicator base area, and that is what I use, the moving average EMA21. Now, I'll be removing every horizontal line, okay? Now, that is why we have the EMA21. We have the EMA21. That is the first level of rejection for me. The EMA21 serves as a dynamic support and resistance level. You know, when price ascend higher, the moving average moves as long as every candle close. So when a daily candle close, the moving average moves higher. So that is all about the moving average. It serves as a dynamic support and resistance level area. And so it happens to be our first area, our first region of what? Rejection. Now, when price rise higher, the first level of rejection we want to be seeing is the moving average level. Now I will take this for example. We have a move from here up to this particular place. Okay, let's start from the low. Now we have the low from here, price went higher. Now when it got to this particular area, we notice that what it retraces back down to the moving average level and the order block. Now, but we are talking about the moving average. Let's talk about the moving average first. Now, it retraces down to the what? To the moving average level, yeah, and form the what? The W pattern and did what? Advance higher. Can you see? Now, it got to this top again, to this particular top, came back down to the moving average level, bounced and went higher. It came down to this particular level, bounce. Came down to this moving average level, bounce. Can you see? Until we have a breakout of the moving average level. Now, and you keep on moving from everywhere of your chart, you will realize that what price respects the moving average level. Even take a look at the sell area. Take a look at the sell area. We have it being respected here. We have it being respected here. We have it being respected here. Respected here. It was expected here also. We have it here also. So you can see the moving average happens to be our what? Our first level of resistance. Our first key level area of either resistance or support, depending on your direction. Now that is the first key level area, the moving average. The second one I want you to take note of is what? Let me clean this. All right. The order block. I'll be removing the indicator right now. Okay, let me leave it. Now, see, if you look at this, if you notice that wherever price closes below the moving average level area, it retraces down to the order block. Now, look at this. We have a close below this moving average level. And what happened? Price retraced to the range of this order block. Can you see? Now, it went higher again, yeah? From another block that was not yet filled. From another order block. Now, this order block also held price at this level. And price did what? Price went higher. Now, this is a confluence. We'll be talking about that. This is a confluence. It's a confluence region. A confluence is an area whereby price retraces down to the moving average. And the moving average level is also the order block level. So this automatically is a confluence. Now, the next thing we want to look at this. Price respected this level again, this order block level, the range of the order block again, then move higher. Can you see? Now, this is another confluence. We have price respecting the moving average level with the order block is a confluence. Can you see? We went higher. Price came down, went higher. We have this again until we have the final fall, which causes the what? The retracement, the reversal for a sell side. Now, if you look at this, if you notice this, wherever price forms the moving average and breaks below the moving average, this is for a bullish trend. What happens? The other blocks serve as the what? The next level to look out for. So whenever you are trading and price hits the moving average level and did not respect the moving average level, the next thing you want to look out for is the order block. You want to check out for the order block and see if there is any order block in the middle of the trend. And what happened? That should be your key level area, the order block. Now, remember, the order block is a candle base key level area. The moving average is an indicator based moving average, key level area rather. Now, the last one we want to talk about is the market structure level. Now, we talked about the market structure level in our last video. You can check the link below to watch the video on the market structure level. Now, the market structure level will be represented by what? Our horizontal line. Now, when you look at this, when price retraces below this, it didn't close below the market structure level. It went higher. Automatically, this becomes our market structure level. It didn't close below the market structure level. It went higher again. Automatically, this becomes our market structure level. It didn't close below this. Can you see? Then it rejected this and moved higher. Price didn't close below this level. It still went higher until it gets to this market structure level. Remember, then it breaks below. Can you see? And if you notice this, it breaks below the moving average, 1. It breaks below the order block, 2. And it closed below the what? The market structure, which serve as the what? The order block. So that is it. That is how price respects your key level areas. You don't need your chart to be so clumsy. You don't have to find difficulty in looking for support and resistance level. You just want to go out there, notice the trend of the market, and plot your key level areas, the order block, the market structure level, and the moving average level. If price did not respect the moving average first, it's going to respect the order block. Then when it does not respect the order block, it's definitely going to respect the market structure. And if it does not respect the market structure, you are about to see a reversal. Now let's take a look at this bearish market. Can you see we have a touch of the moving average here, and price drop. Now price went back again to touch this moving average level and our order block, which I told you is a confluence. Now notice something about this confluence. I want to explain about this confluence. The moving average, price did not close above the moving average level. Can you see? It didn't. Before it gets to the order block region, this is a confluence. And when price touches a confluence, it does what? It pulls faster away from the confluence range. And so we have a confluence here. We also have another confluence here. Can you see? This is the order block and this is the moving average. Now price retraces to the moving average and the order block, came back, from another order block here, from another order block, came down here, another order block. Can you see? And price drops like this. Price drops to this region and went back up to touch our order block region. Can you see? Then it did what? It drops. Can you see? Again, our moving average and the order block serve as a confluence. Can you see? We have the confluence and we have the moving average. Can you see? Then what again? The market drops. Also again, we have price trading into the order block and the range, the moving average range. Can you see? These are the key level areas. You don't need to pack your chart with so many support and resistance line. No, you just have to spot this place at the beginning of your trading, your analysis. Spot them, price is going to trend into them, then you look out for your entry style and your entry pattern, then you take your trade. It's that simple. Please make use of good risk and good risk money management. Now if you look at this again, price went up to the moving average level. Can you see? Then it drops until we have a final break of the market structure. Now if you notice, at every point in time, price didn't break the market structure. This was our high here, the higher low, another higher low at this level, another higher low at this level, another higher low at this level. Yeah, price didn't break above them. We didn't have a break. There was no break of the market structure level. Can you see? And it keeps on trending. Now when we have a break at this particular place, let me make it bolder, change the color rather. Okay, now good. Now when we have a close above this market structure level here, can you see what happened? The market reversed. The market went higher. Can you see? Now that is price for you. And if you want us to check this, you will see that wherever price gets to the breaks below the moving average level, is going to go down to the order block level. The order block level, just know, if it breaks below the moving average, it's going to target the order block. When it target the order block, the next thing it's going to target is your market structure level. So it is only when we have a break of all these levels that price is going to reverse, especially the break of the market structure level. So guys, that is it on today's video on the key level areas when trading. Don't forget, we have the order block, we have the moving average, and we have the market structure level. The order block serves as a candle based key level area. The moving average serves as an indicator based key level area, and the market structure level stand as the trend based key level area. And don't forget what I said about the confluence. One more, this is a confluence zone here. A confluence in the sense that at the touch of the order block, this is another block level. This is another block. This particular bar, let me make it bolder. Okay, good. Now this particular level, this bearish bar here, is another block. Price move away from the order block, then come down to our moving average level. Can you see? It came down to the moving average level and it was respected, because the moving average level is also the range of our order block. Can you see? The moving average level is also the range of our order block, and price did not go below the moving average level. So this is a key confluence. Just remember, for a confluence, we need price to respect both the range and the moving average level without closing below, not even going below the moving average. It always forms a wick. It forms a wick, or it's always what close. Respect the moving average level. Let's look for another confluence. This isn't a confluence. This is because we have a close below the moving average already. Let's keep on going. Let's see. Okay, good. We have a series of confluence here. Now, this is the key confluence level. Can you see? This is the range of the order block, and price did not close above the moving average level. Can you see? And we have a what? We have a drop. I told you, whenever we have a confluence, price will always do what? Shift away from the what? The confluence level. That is what price will always do. It will always shift away from the confluence level, and that is this confluence. This is it. We have a drop. Another confluence occur here. We have another block here at this region, another block at this region. Yes, that's another block. And what happened? Price came to touch the moving average level, then it drops. So guys, all this will always occur. It will always occur. This is a clear confluence, a clear confluence. This is the order block level region. Can you see the region of the order block? And we have the what? Price respecting the moving average level, and we have the drop. So guys, this is what you have to see. This is what you have to check out for key level areas. It is not going to touch. If it does not respect your moving average, it's going to respect your order block. If it does not respect the order block, it's going to respect the what? The market structure level. So you want to trade into this trend at this key level area until when you see what? A break of market structure level, which is at this level. Then you know that what? There is already a change ready to occur. So if you want to know more about the market structure, there's a video below this. Check the link for the video. Then you watch about the market structure level, where we talk about the part 1, how to spot market structure level, and the part 2, the retracement strategy using market structure level. Thank you for watching. Don't forget to subscribe to our channel. Thanks once more for watching.